Hey traders, welcome to the channel. So today we're going to be covering how to read candlestick charts like a pro in just 10 minutes. But before we start, if you could just like, subscribe, do all that good stuff, that would be great. So without further ado, let's get cracking. So traders, are you facing these issues? Are you feeling overwhelmed by technical analysis, difficulty interpreting price movements, or just lacking confidence in making trading decisions? By the end of this video, you'll know how to read candlestick charts like a pro in just 10 minutes. Why should you listen to me? So I'm the co-founder of the Divergent Trader, where I've helped hundreds of traders become consistently profitable. I also collectively have over 300,000 followers across my socials. I'm also the author of the book, The Blueprint to Trading Psychology. And as well as all that, I've been a full-time trader for 5 years now with over 10 years of experience. So you're in safe hands. So here's what we'll cover in today's video. We'll cover the candlestick basics and anatomy. You'll be able to read candlestick charts, and you'll also be able to spot trends and reversals. So candlestick basics. So we have to start with candlestick colors. The first one we'll start with is the green candle. When you see a green candle, it basically means price is appreciated. It's gone up. And the technical term for this that you'll hear many traders say is it's a bullish candle. So green that's going up means bullish. And this is what it looks like. What's happened is price has opened up at the bottom here and it's closed at the top there. And the wicks indicate how far price went within that time before closing. And a red candle is the opposite. It opened at the top and closed lower. You can see it opened here, went all the way down and closed at the bottom. And the wicks again, just how far price went within that time. So the candlestick body size, so a large body, that indicates strong momentum and indicates price moved a lot. So if you see a big green candle, it means strong bullish momentum. If you see a bearish red candle, a lot of strong momentum to the downside. So if you see small candles, that indicates weak momentum, price is hardly moved. And sometimes you'll see a doji. Now this is a very small body, it equals indecision. So price is closed in the middle. There was no winners or buyers, it was an equilibrium. So it opened here in the middle, went up, went down, and just closed back in the middle. Next, candlestick wicks, shadows, and tails. Like I said previously, the wicks are just how far price went during the time. So you can see here, price opened at the bottom, and at one point it went down, and then went up, and then closed there. And the wicks just indicate, how far price has gone within that candle. And wicks on the red candle, exactly the same. So price at the highest point went up here, and at its lowest point it went there. Now, an important use of wicks and shadows and tails on candlesticks is when you see a bearish or bullish pin bar. This is similar to the strong momentum candles. It's showing that there's strength on the opposing side. What I mean by that is price opened here. The bulls pushed it all the way up to here, but the bears pushed it all the way back down, indicating that they're in control. So the bulls were in control at one point, but by the time that candle closed, it just full of a wick. So this is why it's important to wait for the candle close, because at one point that candle would have been bullish, a big strong green candle, but when it closed as a bearish candle. So this is why it's important to wait for that candle close. A lot of traders jump in a bit too early and then they get trapped. And yeah, it's the same with the bullish pin bar. So price opened here, and at one point it went all the way down looking like a real bearish candle, and then eventually closed up here. So it opened here, and then closed here. Even though it's a red candle, what you really want to look at is the wick. The wick is twice the size of the body. The body is closed within 25% of the range of the whole candle. So that's indicating bullish. Even though it's red, it is bullish strength. Obviously, if it's a green candle, that is a bit better. So price opened here on this one, went all the way down here. This would have looked like a strong bearish momentum candle, but eventually it came all the way back up and closed higher. So yeah, pin bars are real strong candles to use. So engulfing candles, this is a pattern that I like to use. And what it basically means is you have a small candle and then a bigger candle that engulfs it. So a true engulfing engulfs the previous candle from wick to wick. So you can see here, that's the bottom of the wick, that's the top of the wick. And this candle totally engulfs the previous candle from wick to wick, including the body. So when you see that, that's a sign that the bulls are in control. When you see a big green candle that engulfs the red candle, because the bears were in control, but then the bulls stepped in and engulfed them. So it's a bullish sign. And the same with a bearish candle. So the bulls stepped in here. You'd think it was strong, and then the bears stepped in and engulfed their candle. So this is an indication that price could go down. So candle formations, by looking at a series of candlesticks, you can gauge the overall mood sentiment of the market. So if you see a series of long green candles, it means that price has been rising consistently, indicating that traders are feeling optimistic or bullish about the market. So a few strong green candles, that's a bullish sign. Conversely, a series of long red candles suggests that price has been falling steadily, indicating pessimism or bearish sentiment. So that's showing bearish pressure. So reading candlesticks on a chart. One of the best platforms I advise is to use TradingView. This has all the software, all the tools that you need, and it's much easier and simpler than other platforms. And you can find any of the assets you're trading, you just type it in and it will come up. You can select the time frame, it can be the hourly, daily, weekly, etc. So whatever time frame you want to trade. Maybe you have a job and you don't have time to day trade, you can look at the daily time frame and look to trade your strategy on that. Each candle represents that time frame. So if you see a daily candle, that's 24 hours of price action before it closed. If you see an hour candle, if you're on the hourly time frame, each one of those candles is an hour, and you can go lower and lower if you wanted. You could go to 1 minute candles. So on here we have the hourly, so you can see 1 hour. So every single one of these individual candles has took 1 hour to form. The higher the time frame, the stronger the signal, because it's took more time, more orders, more traders to create that candle. So a daily candle is much stronger than, say, a 1 minute candle. So there are your time frames that you can choose to trade on. You just select it. So next we'll go over spotting trends. So spotting an upward trend. The first thing you can look at is the candles. Are the multiple green candles going up? So you can see here we've got green candles going up. That's indicating bullish pressure. Again here, indicating bullish pressure going up. Now what you can also use in combination with candlesticks is higher highs and higher lows. So when price makes a high, a low, and then breaks that high, like so, that is how you can identify a trend when it's making higher highs and higher lows, like so. So next is spotting a downward trend. So what you look for is a series of red candles that indicates bearish momentum. So you can see here we have lots of downward red candles here. So that's indicating downward pressure. Now what you can also use is combine that with structure. So in a downtrend, price makes lower highs and lower lows. So you can see here price is making lower low, lower high, lower low, lower high, lower low, lower high, and then makes another lower low. So what it basically looks like in a trend is this, a stair-stepping motion, always breaking the lows of the previous candle. And what tends to happen is usually they come back up and retest, but that's another video for another time. So next we have spotting sideways markets. What that is, as I've drawn there, it's just basically going sideways. And what you usually see in this is lots of small candles. Usually you see dojis where nothing's really happening. And some traders trade the breakouts for this. So when it gets really tight, you can trade it to break out either to the upside or downside. Again, that's another video for another time. So next is spotting the change in the trend. So how we do this is we use that market structure, which I briefly covered just then. So I'm just going to go over it a little bit now. So in an uptrend, it makes higher highs, higher lows, higher highs. In a downtrend, it makes a lower low, lower high, lower low. So when you combine candlesticks with market structure, it can really help you identify the environment and which way to trade. So you can see here, we have a higher high with lots of green candles indicating bullish momentum. A weak pullback, lots of small candles for the lower low. So that's how you can use the candlesticks as well. So strong momentum candles going up, weak candlesticks pulling back. So who's in control there? If you're looking at the structure and the candles, obviously the bulls. So then you can see here, makes a higher high because it breaks this previous structure here, pulls back, makes a lower low. And then look at these three candles now, three strong bullish momentum candles, making a higher high. But what happens now? Price now breaks the low here. So now it's made a lower low, and then a lower high, a lower low, a lower high, a lower low. and that's how you can use structure. So another way you can spot trends is doing it mechanically using EMAs, or you combine this with market structure if you want, and the candles. So you want to use slow moving averages like the 200, the 100, the 50, and then a shorter one perhaps like the 20. And when these are aligned, you're in a downtrend. So you can see here the EMAs are aligned in order. So 200, 100, 50, and price is obviously going down when these are aligned. And you can see when they start crossing, we go into that sideways market where we said, price just goes sideways. And then you can see they slowly start opening up. And what happens? Price starts to trend up. So using EMAs is a nice systematic way. So spotting reversals. So what we can do is we can look at the candlesticks and look for exhaustion. Just like I said previously, when you see a big strong momentum candle, that's indicating a lot of strength, and it's more likely to keep going if it's going up, for example. But when the candles start getting smaller and smaller, that shows that the price is getting a bit weaker, so it's losing momentum. So that's how you can actually spot reversals. So you can see here, we have a big, strong momentum candle here. And then the candles just start getting weaker and weaker. And eventually it reverses to the upside. And what's happening here is it's just losing momentum, kind of like a roundabout. When you're in your car and you're going to a roundabout, you ease off the gas and you start to slow down, and then you slowly go around the roundabout. And that's kind of like what this is doing here. You can see it's slow, it's strong, and then they start to slow down and then ease off the gas and then put the pedal to the metal again, and it goes up. And it does the same here. Big, strong momentum candles, and then it just gets weaker, curves round, and then drops. And that's how you can spot reversals using the candlestick formations. So your next steps: practice with real charts. Use this website, tradingview.com. It's the best out there to do this. Use candlestick charts alongside other technical indicators like them EMAs that I showed you. You can also use the RSI for the reversals as well, or price action like support and resistance. When you add all these things together, you can create a real complete system. As a beginner, you need to allocate time to learn and practice trading. If you find it impossible to find time, watch this video